So we are live here with this session talking about how to protect your assets, how not to lose 25% of your purchasing power in the market crash in the coming months of this 2021 and the next decade. Because we are going to talk about different topics that we need to cover to understand the value of money. I have everything here, okay, detailed, so we can go step by step. And I will be also sharing screen to show that data, right? Because I studied science, I studied with this. We need to prove things so that we can have a solid standpoint of what we are talking about. So let me start showing you how we can protect our assets, okay? But first, until we get there, we're going to talk about the purchasing power of the US dollar from 1910, 2021. Then we're going to talk about the GDP, the money printed in 2020, hard money, the sound money and unsound money. If you've read the book, The Bitcoin Standard, you will hear a lot of terms that it's explained there. We will also talk about inflation and devaluation and why it's not just the cost of living 2-3% each year, but the devaluation of the currency that it's what really matters. And yeah, also owning a piece of a company by investing in the stock market or investing in other places. Is it gold a good option? Is it cryptocurrency? Is it another way? Well, we will cover that here today, and we can decide. You can decide. You have all the data, and then you can decide what you want to do with your money. But I have a clear idea of what I want to do with mine, what I understand, what I don't understand. If I want to support a system that it's going to print money, like just pump money into the market, or invest in something that it's capped, that it has a limited supply and it will just appreciate because more people will have it and it's going to become more and more scarce. So this is it. Let's start with sharing the screen. I want to share with you this part here, share screen of yeah, this part. So you can see, let me see, yeah, you got it. So you can see the dollar devaluation. If we check this image, okay, you can see big here how the dollar has changed its purchasing power, right? You could buy 100, okay, with $100 here, the same things you could buy. It's close to here. You see nothing. How much? Well, here you can see it in another graph. So you can see that, yep, probably this is something that you will not want to see, but definitely want to know. Because, yeah, in other words, items today cost over 25 times more than they did when the Federal Reserve was created. That means that you could buy something with $100 and now you would need $2,500 to buy exactly the same. So this is the point that the dollar is losing its value. Why? Because, well, we have data like this one, 9 trillion, okay, 22% of the circulating US dollars printed in 2020, okay, of the whole history. This is an estimation, but you can see that a lot of money is being printed, pumped in the market, okay, for the last months, for the last year, let's say, last 12 months. So this is the thing. This is not what we can call hard money. This is money that can be printed and created. So the more, uh, let's say, dollars that are out there, the less scarce it is. And when something is less scarce, becomes less valuable. Okay, we can say this in different stories. The Yap stones, as well. If you read the book, The Bitcoin Standard, talks about these right stones that there were these stones in the top of a mountain. It became something scarce, and when somebody came from Europe uh, and started creating more of that, let's say, asset or that currency, obviously became devaluated. That's why you are gifting, right? Society is gifting the spouse with diamond rings instead of glass rings. Why? Because diamond is much more scarce than glass, and gold it's much more scarce than silver. That's why gold is much more valuable than silver or than copper that can be just created much more easily than gold. So that's why gold became a standard and store of value for last centuries, right? But now we have another kind of source of value, and we'll talk about that. But the whole concept is around hard money. The ability we have to create more of that currency. So we have this. I will want to share with you this screen. Um, Stop sharing screen because there's a book I want to share. This book that I have right here. So, so this book that I have right here. This is the Bitcoin standard. And when we talk about money supply, we also need to understand the GDP, right? The gross domestic product, and what's the value of society? Like, what's the value of actually the companies creating more value, the technological advancements, and the money that it's being pumped, just like printed easily by the government. So we have a lot of debt, and we need to check different stats. Okay, from GDP, you can read it in the book, but I want to show you this part here. Yeah, the GDP inflation, right? It's been like following all these years, but in 2008 this separated, right? There was an inflation here, and this is kind of a problem because there's a ratio that it's debt to GDP. So these ratios have steadily risen since 1980 and then jumped sharply following 2008 subprime housing crisis and the subsequent financial meltdown. So it says that, yeah, it's close to 106% at the end of World War. And you can see here 2015, 2017, debt debt to GDP ratios of 104. And the study says that everything that exceeds 77% for an extended period of time, it slows economic growth. That means that if we are supporting the dollar, if we are supporting a monetary system like this, where money can be printed so easily, we are not supporting the real value of, okay, I'm going to create more value for society, and in that way the economy grows because we provide more value to the system, to the society, right? So that's why I'm really interested in investing in Bitcoin, right? Investing in cryptocurrency, especially Bitcoin. We're going to talk about Bitcoin because there's not going to be another cryptocurrency, another coin that is going to be as accepted as Bitcoin. Bitcoin hit first, let's say, not the first one, but definitely the first one that got a lot of people uh, invested in it, and it has the biggest market cap of all the cryptocurrency. So definitely Bitcoin is an investment that I want to do. Why? Because otherwise, imagine that we continue having this devaluation of the dollar, this devaluation of the currency. When I talk about the dollar, it's also the dollar, the euro, like the yen. All these different countries with different currencies have been pumping money into the system, and that's the thing. If this money keeps being created, what will happen? It's going to devaluate. If it devaluates, it's losing purchasing power. And we are talking about, as we said before, it's being devaluated by 20%. It can become like this, devaluated 20% in 1 year. That means that if your returns on investment are not above 20%, anything that's above like 4 or 5% on real estate, or I don't know, 10% on index funds, etc., in the long run, you're gonna lose purchasing power because even though you have good returns, the devaluation is gonna eat all these returns, right? So that's why I want to invest in assets that appreciate and then produce more than 20 and 25%. One of these assets, I have it in Mexico. It's one asset that provides me a 48% return on investment, which is good on different algorithms on sports trading. But for me, the longest term one, the one that involves a lot of growth. As you can see here, I want to show you stats. Just here, there we go. No, wait. There we go. Yep. So check it out. Okay, here we have another investment that is much better than the 10% of the stock market. Just check Bitcoin, the price 2015, 16, 17. Okay, you can check here. There was a peak in December 2017, then lost value. You can see in a year it was losing in a year, and then up. And then here's the big difference. If you could invest in March 2020, $6,483, okay, US dollars, the Bitcoin. And then there's a before and after moment. September, 10,000, October, November, December, March, 45,000. You see, in less than 6 months, 4.5x. And then just kept growing till today, right? This is the current value. And if we zoom in, we can do a zoom here. Swoop. Okay, you can see the growth of this currency, and it's going to continue growing. Why? Because now more than ever, big firms like Michael Saylor, CEO of MicroStrategy, he bought 21K of Bitcoin, which was worth 250 million. He is also investing more than that. Now he talks in some of these interviews, if you follow Michael Saylor, talks about investing more than 1 billion in Bitcoin, 1.5 billion by Elon Musk Tesla. So if we look for here, Elon Musk Bitcoin, he has invested quite a lot of Bitcoin. Okay, Elon Musk owns over 5 billion in Bitcoin. Okay, among all the companies, Tesla in particular, 1.5 billion in Bitcoin, and also now accepts Bitcoin payment for Tesla cars. So what does that mean? That means that the market and the investors are putting a lot of emphasis in Bitcoin. They are all trusting Bitcoin. That means that the more trust there is in this currency, let's say this hard money, sound money currency, the more and more people is going to use it as a store of value, and the more the dollar devaluates, the more, I mean, the more valuable it's going to become Bitcoin compared to dollar, because one is going to appreciate because it's going to become more scarce, right? And dollar is going to lose purchasing power. So lines are going to go like, whoop, like this. This is the point that I want to come to. And owning a piece of company, let's say the S&P 500, yeah, you can use that, but that's the same thing for the company. If the company is not growing more than 25%, or let's say you say, no, Miguel is not going to devaluate 25% every single year. This just happened now, but not going to happen every single year. Okay, let's use another number, 10, 15%. You can calculate that for the next 10 years, the next decade, the next 20 years. If that company is not growing more than 10, 15, 20, 25% per year, and is storing the value of the company in US dollars, it's going to lose purchasing power compared to other companies that are storing the value they are providing in other more like harder money currencies like Bitcoin or other cryptocurrencies, etc., etc. So if you're investing in the S&P 500, what you're doing is betting you are investing in something. That's why I completely changed my mind. I mean, I started my investments in the S&P 500, in index funds, etc., etc. You might have heard about Vanguard, about Indexa Capital, about, I don't know, My Investor is another one that you can invest in in ETFs, right? But this is the thing: if you own a part of a company that is devaluating because it's not growing more than the devaluation of the currency, you are losing money as well. You are betting in a company that, and unless you are betting on Tesla or on Apple or on Amazon, then probably they are going to grow much more than that, and the rest of the companies are just going to go bankrupt in the next 10, 20 years if they cannot compete with the level of the currency devaluation plus the inflation that we naturally have every single year, that because everything is becoming pricier, right? So this is the point that I want to come across, and definitely share with you the book, right? This book here, that it's the Bitcoin standard. I cannot recommend it anymore. They are like really like gems. Here in this book, I highlight books. I love highlighting them because it allows me to quickly share with you. Okay, Sound Money talks about time preference as well. Okay, that the lower your time preference, it means that the more you invest in the future, and the more you invest in the future, you can create bigger and bigger assets that allow you to have higher returns of the investment. This is super easily understood with this simple metaphor, with this simple story. There's a fisherman. Okay, there are two fishermen. There's a fisherman catching fishes with his hands. Okay, every single day, every single day, every single day. And then there's the other one that instead of 6 hours a day, what he's doing is, let me see the connection, if it's working. Yeah. So every single day, the other fisherman is investing five hours in fishing with their hands, with his hands, but he's investing 1 hour to fish, to build a fishing rod. Okay, and when he has the instrument, right, that will allow this fisherman to have more fish, he, instead of spending 5 hours or 6 hours once he has the fishing rod prepared, he spends less hours. He needs just 3 hours to catch the same amount of fish that the other fisherman needs 6 hours to catch with his own hands. So what he does is, okay, I'm gonna spend 3 hours with wait, that's it. 3 hours fishing with the hands, with the fishing rod, and then the next 3 hours spent on creating a boat that takes 1 year to create that boat, right? And then that means low time preference. He's losing, let's say, more fish that he could fish with 3 hours of the fishing rod, but it's investing it in a boat. This boat will allow to have availability of more fish. Meanwhile, the other fisherman is still 6 hours a day catching fish with his hands, just barely to sustain the family, and himself eating every single day. So what's the thing? After a year, the second fisherman has already the boat, so he can go farther on the coast and access fishes that the other fishermen cannot access. So what he's doing in just 1 hour, because there are a lot of abundance of fish, in 1 hour he has all the fish that the other fisherman takes 6 hours per day. So he has 5 hours free time. He decides to build a mega boat, transatlantic boat, that's going to take 10 years to go to places that any other boat can go. So he can access fish that it's going to become an unlimited resource of fish for centuries. So he's able to dedicate 10 years with help of a team, with help of more people, to create a boat that will be able to go to the deepest seas in the world and catch fishes completely in abundance, completely blue ocean that not any other boat can go. Any other of the wooden boats made in 1 year can go there and survive. So this is the thing. After 12 years, this second lowest time preference fisherman, lower time preference fisherman is going to have a boat that's going to provide for the whole family and generations food in a way that any other can achieve. So this is the thing. 12 years afterwards, the other fisherman is still catching fish with his hands 6 hours a day. What does that mean? That when we delay our reward, it's like the marshmallow experiment. You can wait until I come back and I will give you two marshmallows, or you can eat this right away, this one right away, and you will just have one. So the more we wait, the bigger the return. But the thing is, if we invest in something and we delay our access to these resources, right, to this purchasing power, to this that we could use that money to buy something. We are delaying that. We at least want something that's going to appreciate, right? Otherwise, what's the point of, let's say, waiting 10 years to have one marshmallow if I can have it now? Well, I will have it now if I know that in 10 years I will have one marshmallow. This is exactly the same thing. If we are delaying our gratification, but we don't see that we can purchase more things because we are invested in a currency that devaluates, there's no point in that, in delaying our gratification. That means that if we are investing in unsound money, unsound currency, that it's not robust, that it's not capped, and it's not going to be scarce. On the contrary, it's less scarce all the time. That means that society will tend to spend money now because it says, okay, I'm going to spend it now because I know that in 5 or 10 years we are going to lose purchasing power, so I will not be able to purchase as many things. Plus the inflation, the prices will also go higher and higher, so I will have double the devaluation and the inflation. So I want to use money now. That means that society is not going to invest, let's say, 10 years, 20 years, 50 years in growing something worth 10x, 100x more. So for me, investing in Bitcoin or cryptocurrency, if you follow Extraordinaries, you know that I have a diversified portfolio, not just on Bitcoin, but also, for example, in coins. Nowadays, it's going to change, but nowadays it's going to be in Ethereum, it's in Polkadot, it's in Cardano, it's in different projects, right? I'm investing in currencies, like, for example, projects that are going to support the Bitcoin network, or altcoins that are going to evaluate, appreciate, and then I can change it and put it into Bitcoin. Because I definitely believe Bitcoin is a great store of value right now, and much better than gold, because gold is just going to appreciate 2% per year, while Bitcoin, as you could see, it's appreciating almost 100% per year or more for the last 8-10 years. It's been appreciating that. So that's the thing. The other thing is that Bitcoin is decentralized, so I don't need to have my gold in a central bank. I can have it on my cold wallet, and this gives me this sovereignty. Like, I'm sovereign on my money. I know what I'm investing in. I understand the technology behind it, and this is one of the things that for me are the best. Understanding what I invest in, because when I'm investing in the S&P 500 or all these stock market, all these companies, I don't know all these companies. Actually, I don't know how the CEOs are planning 10 years, 20 years ahead. What are their, you know, visions? I'm just investing in a system that told me that for the last 200 and 250 years, it's been growing consistently, in average, 7-10%, you know? But in case of Bitcoin, I know exactly what I'm investing in. And this gives me this tranquility, even though it's volatile right now, it's gonna be volatile until it stabilizes. But the more people invest there and the more people hold on that currency, the more it's gonna stabilize. So I'm completely, like, I sleep super well knowing that it's just a long-term investment. It's not just to get rich quick, in 1 year, 2 years, 3 years, but to have something that is going to preserve the value that I'm storing there, for the next 10, 20, 50 years. And if something happened to Bitcoin, the cool thing is that gold would take me, like, literally a lot of money and a lot of time to move, let's say, 500,000 of gold from one bank to another. And the thing is, if the one wants to prohibit that I cannot move gold from one bank to another because it's protecting people from taking it out of the bank, then I'm screwed. While Bitcoin, nobody can tell me, no, you cannot transfer Bitcoin because I have it in my wallet, and as long as somebody feels Bitcoin is valuable, I can send it to that person and receive something in exchange. So this is one of the things that I love the most. And when we talk in Extraordinaries about how 6 and 7 figures entrepreneurs can achieve the freedom trifecta, which is financial freedom, geographical freedom, and time freedom, this is the thing. You want to breathe everything in every act that you do. You want to breathe this freedom. And for me, having the freedom of this control over my currency is something that gives me a lot of, you know? So That's why I'm so like confident about this, because I'm living my values. I don't just want geographical freedom. I also want some currency that I can go to different states, I can go to different countries and not pay taxes on that, or they are really crypto friendly, so that I can go there and know that I'm gonna be fine owning crypto in that place, right? So that's the thing. This is my approach on why I invest in cryptocurrency, why I'm moving. For example, yeah, this week I'm moving 70% of my net worth. Yeah, close to 75% of my net worth that I had in index funds. I'm moving it out of index funds. So yeah, it's a big withdrawal. That yes, it has some like fees on this transaction. I did things to make sure these fees are the lowest possible, but I'm investing all this money in Bitcoin. I'm investing all this money in cryptocurrency because I believe in that. I know what I'm investing in, and yeah, I'm confident it's gonna appreciate. And if not, in one transaction, in one click, I can sell all Bitcoin, or I can transfer it, or I can do whatever it is. So I'm confident that I can move, I can have speed and agility in case something happens to move my money, my assets, right, around. So this is one of the my strategy to protect myself from losing 25% of my net worth instead of storing it in unsound money like the US dollar or the euro, especially for the next decade, because yeah, it's expected after this pump of money in the US market and in different countries as well, the euro in Europe and the yen in Japan. We have yeah we have a system that I don't see a good future for it. I'm not saying that the US dollar is going to disappear, the euro is going to disappear. I'm not saying that. I truly believe it's going to stay around for a long time. The thing is with what value, with what purchasing power. And yeah, we will see as well what happens with cryptocurrency, because I truly believe that nations and different countries will not like that people is storing their money in cryptocurrencies, but we are seeing already states in the United States, we are seeing different governments that are investing, that are putting their money of the state into cryptocurrency to protect the assets. So every time a government or a big firm like Tesla or SpaceX or entrepreneurs like Elon Musk or Michael Saylor are betting millions or billions of dollars, of euros into Bitcoin, the more and more the network it's getting secure. And if you have like doubts or questions around this, it's totally normal, and I totally encourage you to do your research. This is not financial advice. I'm not a financial advisor. This is purely entertainment. I just show you things so that you can have more data objectively, and you can move your money around as you wish. I would truly recommend, before finishing this live session or this recording that you might be watching, that you can leave comments below letting me know what you think. I would say get the research done. You cannot delegate learning about Bitcoin, learning about blockchain. You cannot delegate that. I mean, health and money are two things that I truly believe you cannot delegate, and you need to understand yourself. Because if something happens, nobody's gonna save you. If you trust a financial advisor and market is gonna go down and it crashes, the financial advisor is not gonna put his or her money into your bank saying, "Oh, yeah, sorry, I gave you bad financial advice." You will, you know, and health as well. If you do something that it's not working well, and then I don't know, you take some drinks or some supplement or something that is having a side effect, nobody's gonna come and take time back so you can recover your health. So that's why I truly believe that you need to put the hours in, learn about Bitcoin, blockchain, Ethereum, the different protocols, the different visions that companies have, Cardano, Polkadot, etc., NFTs as well, the art and how blockchain is going to revolutionize all this. You might believe in it or not. You might be an early adopter or a late adopter. That's totally fine. At least you have the information to take the best decision for yourself. With that being said, I'm Mikel Girones. I help 6 and 7 figure online entrepreneurs to have the trifecta, the freedom trifecta, which is financial freedom, time freedom, and geographical freedom. And I like to have these open masterclasses with you because it allows me to share what I'm doing, not in theory, but actually I'm saying I'm moving big chunk of my portfolio towards cryptocurrency, and time will let everybody know if this is the right decision or not. But at least we need to take decisions, position ourselves if we want to invest in something that it's based on lies sometimes and debt and hiding things and hiding numbers, or cryptocurrency, for example, and the blockchain that it's truth, it's objective truth because this happened and it's recorded in hundreds or thousands of ledgers in across the globe. So if you believe in low time preference, in delaying gratification for the well-being of the future instead of debt and spending and consumption, now truth, lies, debt, savings, you know, it's also your values. So with that said, see you in the next open masterclass. Two things. Okay, number one, if you want to let me know what do you think about this masterclass. If you want to let me know what's the part that you love the most, something that you agree, you disagree, you have new data, something it's some months go by after you see the check the date of when I did this recording because maybe some things have changed when you're watching it now. Let me know updates here. I'm super happy to uh, engage, connect with you, and learn because I truly believe that the power of extraordinaries is this collective intelligence. I believe in masterminds, and this is what I want to create with this project. And number two, if you want to have more time freedom, geographical freedom, financial freedom as a 6 or 7 figure online entrepreneur, click the link below because you will have more resources. Apart from this masterclass, you will have sheets like Google Sheets, you will have like spreadsheets and documents and protocols and all kind of systems that will allow you to like hire people in A players in your team in 60 minutes or less of your time, or multiply how I multiplied by 404% my net worth in the last 12 months. Systems that will allow you to delegate or to create more than 100 pieces of content a week with just 60 minutes of your time. All these kind of things, how to legally reduce your taxes and go where you're treated best, whether it's on personal level, financial, or let's say business level. The flag theory, all these things is what we care about because it's about living a more free and more happy life as online entrepreneurs. So if you are interested in this, click the link down below. And if you also want to cover some topic in next masterclasses, just let me know. What would you like to hear about? Okay? Yeah, this is collaborative. We are co-creating this together. So, with that said, I will read you and see you in the next one. Miguel Girones from Oaxaca, Mexico. This amazing place. If you come to Oaxaca, you have to check out Los Pilares, this amazing hotel. I just love spending my time here, and I'd love to connect with you soon. Bye bye. See you.